Welcome to this week's Cattle Call. I'm Susan Littlefield. A lot to look at. If you remember last week in the market trade, we were doing a little celebrating because we definitely saw some higher trade numbers. Well, the numbers this week have had their little ups and downs, but still we're talking 138 being, and some are even passing on that. So we're going to find out what's been going on within that cattle market on that. Are the producers still in the driver's seat? Of course, the negativity on the horizons, more COVID talk that's out there. And then we'll talk about the seasonality of what is happening because we are now into the month of December. Lots to look at today as we're being joined by Brad Koima. He's with Koima, and Varlick out of Sioux Center, Iowa. So let's start there. 138 and being passed. Do you think that's okay for December?
Well, yes. I mean, you and I, when we were prepping here a little bit, I was a little despondent, right, that we didn't close a hair better today. Still higher, but yes, I think that's good to ask a little perspective type question. I'd say 2 weeks ago, I think I sold cattle at 134. 3 weeks ago, 131. 6 weeks ago, at 124. So kind of the old quit your bitching, Brad. 138's a lot better than that. There was a little bit of 140 trade late Friday. I did actually sell a pen of cattle that way to one of the small guys. So I think, and it's, by the way, widespreadly getting past the 138 bids too. So, that came out already yesterday on a Tuesday. I thought, it was a nice sign to see the packer being relatively aggressive, trying to get some inventory. So no, guys shouldn't, I guess, complain. The first time we got to 138 a week ago, today, I guess we were delighted. So for the most part, this 138 is getting past. There's a little bit of it leaking, Susan, in the north here and there. And I suppose there's going to be, given what the basis is, I suppose it's understandable, right? Typically, the basis would actually be the other way, where futures would be a little above cash, and now actually you have a chance to cover hedges $2 below 138 at 136. So, maybe that's part of the reason they're incentivized. I don't see that that's a negative thing, really. I think that the producers is very current already, and you finally got cash cattle at profitable levels here, Susan, where the guys are finally making some money. Finally, I think you're going to find willing sellers. The weather's been ideal, and I think guys are going to take advantage of maybe a little better gain and finding some black ink, and they're not going to hesitate to sell cattle, and that's positive because you pull the cattle forward, then and take some weight out.
Well, having said all that, can we say we're still in the driver's seat, which is something even a year ago we didn't have that type of control?
6 weeks ago, even maybe,
even 6 weeks ago.
Yeah, I certainly not a year ago, and certainly not. We've talked about it. You can trace it all the way back to the August Holcomb fire in August of 2019. I'm going to answer to that question that yes. Now to say that we've got all the leverage in the world, I certainly don't mean that, but I do think we do have the courage and the ability to finally pass bids and say no. And I think that's been the case now for several weeks, and what's gone alongside with that is this increase in negotiated trade, which nobody's going to convince me otherwise. I believe firmly that as you increase the number of negotiated trade, you increase leverage. You also, along with that, will see the increase in the underlying price. So, yeah, we're in a much better spot now. We've had huge kill. I mean, who's kidding who?
Mm-hmm.
This excuse that nobody shows up, or shucks, I can't get daycare for help. Nobody wants to live where the yada whatever. I think that the incentive on the part of the commercial here with still big profits is finally driven the bus to where they're killing enough cattle, and now that we're current enough that we can pass if we want to.
What about the shakiness, though, that you were telling me about in this boxed beef market?
Well, it's a little soft here, and typically one of the most reliable tendencies here on the meat market would be that you get into, once you get done with the first week of December, typically the middle meat's the high price stuff I'm talking about. I'm talking about the ribeyes, the whole tenderloins, something that people would use for a special occasion, okay, like Christmas, New Year's parties, things like that, office parties, all that stuff. So, I think what happened is I think that we had a bit of a greed factor here. I think that there were some instances where this stuff got priced so high, particularly these big box places, that the consumer said, "Wait a minute, $23 for a ribeye? Give me a break." And so, do I feel sorry for a middleman that's stuck with that deal? Not even a little bit. Price the stuff into consumption. Let's get rid of it. I mean, and they will. I do hear that the outfront demand going into the next spring is excellent. So a little glitch here maybe for a moment. Packers got lots of margin. Boxes can break $10 and they still got lots and lots of margin. So let's not get too panicky just yet.
So, what's your thoughts on this whole Cargill and Canada strike talks? Is that something that could have a market factor?
Unfortunately, yes, it is. That is a big plant. It's a significant part of the ability to procure or to slaughter and process cattle in Canada. Almost maybe a third of the cattle up there. So yes, it is a significant deal. Now, I thought 10 days ago, the people that I talked to, they were very confident at that point that they're going to reconcile their differences, that they wanted to keep working and all the rest. But then I think, when they came out with that deadline drop dead deal here again, this time from the Cargill side that says, well, we don't have anything by December 6th. It's a lockout. We're done. Active negotiation is still going on. They say they're close, but yes, we've got to watch it. And then, you get a day where it flushes hard like this off of the highs. You go like, oh boy, does somebody know something? I think the other thing though today, we talked about it a little bit, was this gorilla in the closet, right? The COVID deal, and with the first official confirmed case in the United States. I wondered if that maybe, it took the wind out of the market sales just a bit. I guess I'm not a doctor, of course. I'm hopeful that we have learned how to live a bit with COVID. This is not where we were 18 months ago. My sense is that it's not going to be quite the newsworthy item as it may have been a year ago prior to the election. But I don't want to. I'll be the first to admit that I underestimated the first round of it, and I want to be careful not to underestimate this round too. But I believe the market's in a better place now than it was the first time when we were trying to just figure out what it really meant.
Well, finally, what are your thoughts on the seasonality of what we're seeing in this market? And are we too cheap for December?
Historically, given a basis relationship, we are, Susan. Typically, by the time you got to the second week of December, we'd often be too under, or rather, cash would be too under futures. Right now, it's the other way around. Futures are too under the cash. I think it's what's going on. I think it's the same reflection of the lack of confidence on the part of the long speculator. Whether that long speculator is the individual trader or whether he's the institutional fund type trader. I don't think that that's bearish, however. I think that incentivizes us to stay more current. So seasonal, what you would expect is December to gain on everything and to generally gain on its underlying price as we go from now into the next, until we finish off December.
All right, lots to look at as we hit this final month of 2021. Thanks, Brad.
Very welcome, Susan. Look forward to next week.
All right, that's this week's Cattle Call. And as always, commodity futures and options do involve a substantial risk of loss, and they're not suitable for all investors. That's the Cattle Call. I'm Susan Littlefield here on the Rural Radio Network.